Dana, it's fantastic to have you here at SuperReturn International. Always a pleasure to have you in our studio. And you, with your position at J.P.Morgan and serving on the investment committee, you have such a unique overview really of the ecosystem at the moment. So how would you characterise the environment and how this industry are coping with it?
Yes, great question. Not as opportunistic, not as optimistic as we were heading into 2025 for obvious reasons, whether geopolitical, impeding macro situations. But I think what we're doing now is what we always do. We're continuing to approach investment opportunities bottom up, really understanding underlying companies. And I would say manager selection has never been more critical. And it's always obviously critical to everything we do, but particularly now because you're coming off of a period, a decade and a half, where, returns have been, very satisfactory, to say the least in most cases, and up against some challenges. Everybody's referencing vintage 2021 as being a little bit more challenging, and we're starting to see some of the impact in those vintage years. We're also seeing changes in, strategy, maybe strategic drift. We're seeing issues with succession. We're seeing issues on exits that are widely reported in the paper. So I think there's no better time to be really, hands-on, really bottoms up, and evaluating manager selection.
So hands-on, working hard, how would you say that's manifesting? Are firms looking for different approaches, different vehicles? Where are they finding that sort of safer ground at the moment?
Yeah, I think that's safe ground for certain, we focus on the mid-market. About 80% of what we do are in funds less than $3 billion. And I don't want to say it's business as usual, but I think the focus is now on what are they good at? What's their specialization? Bain in their 2025 report said, things that you want to look forward to is that specialization. So what's that toolkit look like, and where's the proof that they can execute on that?
When you talk about a toolkit there is a lot of dry powder around. It needs to be deployed, and you talked about a slightly sluggish M&A environment. So where do you think the opportunities lie at the moment in terms of, we've heard a lot this week about credit, say, or different areas of the capital markets that perhaps haven't been as at the fore before?
Yeah, I think on the private equity side, which is where we focus, I think the opportunities are, on resiliency, whether it's a healthcare services company or, an IT business services company. Really looking at how resilient is it? How resilient are the customer? How mission critical? Is it even on, discretionary consumer or non-discretionary consumer? We're not afraid of those opportunities, but you really have to understand what does it look like and what are you underwriting to and what is the GP underwriting to. And so those are the things we try to break apart and look for those opportunities. I think on the fundraising side, there was this mad frenzy obviously leading up into the first half of 2022. And in a way, it's playing to our advantage now because it is taking longer for fundraising. So we have more time to spend and vet manager selection, but oftentimes they have co-investments to share with us, or it's a partially funded primary, so we can really dig in and do, high quality due diligence on those existing investments. So I think there's silver linings to be had.
And you talked there about finding, the opportunities and being very much sort of ground up as you described it. I guess one of the big sort of things that everybody's talking about at the moment is how AI and tech are going to be disrupting a lot of these industries. And they are, an industry in themselves in terms of investment opportunities. So what are you seeing there, and how are you dealing with that? Because there is a bit of a fear that could this be potentially a bubble, if you like, the AI and tech kind of focus, and where do you need to be careful there?
Yeah, I think you absolutely do need to be careful. I think two things. I think one is perhaps you do get over your skis. Every AGM we attend, the GP has their, it's like ESG was a couple of years ago. Everyone has their slide in their breakout session of what are they doing in terms of the firm to source new things and to optimize and be more efficient. And then what do their underlying portfolio companies do? And so we take that on board and we really kind of poke and prod it to see, what is really viable. And we do it too. It's helping our processes. It's helping us get more efficient. I think, when you mentioned bubble, I think the care and concern you have is it cannot replace investment judgment right now. And that is critical, particularly in times like this. So I think while it's helping efficiencies and processes and enabling us maybe to have better KPIs and tools to evaluate. That evaluation is still critical, and we're not seeing that yet develop on that digital trend.
You've always described this industry to me as a relationship business, and that can't be done by AI.
And a judgment business, yeah. And it's helping, but it's not the answer.
And I guess you need the right teams to be dealing with that as well. So talking to other people this week, they've actually sort of brought on board very specific AI expertise into teams as well, to give them that view of what will be disrupting businesses.
Yeah, and obviously, J.P.Morgan's spent millions and millions into their AI infrastructure. Our team, utilizing the LLM that we have in an extraordinary way, in very fast-paced way. But yes, you do need that expertise, and you just need to bring everybody along. As I always say, nothing ages us more than technology. So it's critical to stay, afresh with that.
Now, it'd be remiss of me, having met you originally nearly 10 years ago, when we were talking about level 20 and ambitions to have more women in private equity.
Yes.
Obviously, that's a theme that continues, and we continue to push for more women represented on senior levels. What would you say is the environment now, and how do you feel all these years on that
it hasn't changed? I mean, I'll say two things. One thing is, the whole mission behind level 20 was to help, private equity make better investment decisions, better outcomes, both at the firm level, their underlying portfolio company, and at the return level on behalf of LPs. So that's still very, very true. And level 20 will be 10 years old in November, and it's something we're all very proud of. There's over 7,000 members. There is a roster of outstanding sponsors and very committed people, and we've transformed culture. So still feel very positive about the impact and the future impact that it can have in supporting women.
And there's a huge argument that all those women are helping to not only improve the bottom line, but they're mitigating risk in these companies too. There's a real reason for this diversity. It's not just a nicety, is it?
No, it is absolutely not. And creating better culture amongst these firms, and the trickle down, and creating better careers and more job satisfaction. And so I think that, I know there's a lot of political kind of pushback in some parts of the world, and things do kind of get over their skis, but this is not one. And I think that, the positive mission for better outcomes remains and will remain.
And I guess that ties in as well with talent. So one of the key things in this industry, and if we're looking at a more complex and tricky environment, you need real talent in your teams. And to be able to attract that talent, you need that cultural appeal for the very best talent to join your teams.
Talent is what you put in, what you get out. It's like anything, and that talent needs to be fostered. Private equity, I think, on the investment side is an apprenticeship. We always say that in the PEG group, and it takes years and years to develop kind of, what does good look like? I mean, we're investing in the long-term blind pools, and so there is a lot of trust, but that trust needs to be backed up with experience. And so that's the kind of what we're trying to do for the talent. We believe that, building from within at a very young age and growing the talent within our firm, that's been our best recipe for success.
Dana, you're obviously still relishing being part of this industry as well, and very excited about what's still the opportunities that are there.
Absolutely, yeah.
So just in the next sort of 12 to 18 months, what are you most sort of excited about, and what will you be focused on?
I don't want to say business as usual, because that seems like you're taking, the foot off the accelerator or downshifting. But I mean, when you look at this conference, this is it. You're trying to find that new thing, or you're trying to find some opportunity that you didn't think about before, or a way of looking at a team or an investment or a secondary in a new way, or in a more educated way. So I think that gets us excited. I think in terms of what's to come, there's so much uncertainty, probably more than there was if you asked me 5 years ago. There's a lot more capital. There's a lot more capital directed at continuation vehicles, at the democratization, high net worths, and all that kind of capital will shift. It'll shift returns. We'll be overcapitalized in some areas. I think some of the mounting unrealized portfolios that people have to exit will, be challenges. And I think the other thing is, the viability. It takes a long time to kill a private equity firm. At the same time, not all will last. And so again, I come back to this really critical manager selection is really paramount right now.
And just finally, an environment like SuperReturn International, there's 5,000 of the industry here this year. It must be a great one for you in terms of energizing you going forward? Does it catalyze stuff for you and make you have those great ideas to go forward with?
It has. I had 5 back-to-back meetings yesterday, and two of them I'm like, okay, there's something here. I'm not quite sure what it is, but there's something to come back and take back to the team. So that is very encouraging. It's exhausting. And you think about, oh my God, this is like my 32nd year in the industry, where did it go? But because it's always changing and no day is the same, it does kind of get you up in the morning and get you excited about, meeting new managers and really kind of understanding the motivation of these GPs and how they're, are they good, stewards of your capital.
Well, it's always delightful to have you in our studio. So thank you so much for sparing the time when you're so busy.
No, always a pleasure. Thank you. Nice seeing you again. Bye.